Okay, here's an example of how day traders can use our alert system. This is a 5-minute chart of Duluth Holdings. At the bottom you can see a demand zone. It's large because it's blown up, but this is copied over from the daily chart. This magenta line coming through here at $26.88, that's a volume peak from our volume analysis, and it's sitting right in our demand zone. So this is kind of the area we're looking for price moving down to. This will work even without the magenta line there. You're just looking for, on the 5-minute chart, a bullish candle in the demand zone. Okay, and you can see that we have that right here where this green arrow is. Okay, as price came down on the daily chart, it was set to generate an alert for us at $27.50 if price crosses $27.50 to alert us that price is moving down into a demand zone that we have defined. Now, as you can see, that gives you plenty of time for this trade setup. Okay, this is a 5-minute chart, so we've got almost 15 minutes before the entry on this trade setup. And what you do is you look for your bullish candle on a 5-minute chart, and the entry is when price just breaks the top of that bullish candle. Okay, for our target, since we pretty much had 3 candles that were straight down, we would use the open for the day as the target, and then which was $28.64, and I always back that off just a few cents just to make sure I get executed. Okay, so the entry would have been at 27.38, our target 28.60. That's a risk of 43 cents because our stop is going to go right down here below this bullish candle. Okay, so our stop would be $26.95. So that gives us a risk of 43 cents, a reward of $1.22. That gives us our reward to risk of 2.8 to 1. Now we normally look for a 3 to 1 reward to risk. So what you could have done on this trade is you could have either not taken it because we didn't have the 3 to 1, but it was really close, or once you got the signal to enter the trade, you could have waited for a pullback. And you can see that worked here. I mean, it pulled back a good 10 cents at least. It's hard to tell on the 5-minute candle how far it pulled back, but we can see from here it had to pull back at least 10 cents, which would have put us in our 3 to 1 reward to risk, because that would have lowered our risk to 33 cents and taken our reward up to $1.32. And so we had more than a 3 to 1 at that point. Okay, or you could have just taken the trade with the 2.8 to 1. That's still, not a bad trade at all. Okay, and then once you enter the trade, once we break this top right here where it's trading sideways, once we break through that, then at that point we're going to move we're going to take our stop and we're going to move it up into this area here. Okay, right below this hammer candle here, which is just a little bit better than a break even on the trade. Okay, and then once we have another pivot, okay, we're going to move our stop up to there, and then we hit our target. And if you were going to stay in it longer, if you're going to try to let it run longer, then you would have moved your stop up here, and then you would have got stopped out at this level right here. Either way, really good trade. You can expect to get anywhere between 3 to 4 all the way up to 10 of these types of alerts every day. We took this trade as an option trade. I ended up putting this out as an option trade to buy the February, I think it was the February 30 calls, if I remember right. But as you can see, this was a great day trading opportunity too. So many of these alerts, actually most of these alerts, end up not being alerts that go out for the option alerts, because a lot of things have to be right for us to take the option trade. But for a day trade, a lot more of these are valid day trades. So